Look at February. Prices actually went down slightly, implying that the pace of inflation is really leveling off and turning down. Mike Lee joins us to watch the market for us this morning. What's the obvious? What do you think the Fed's going to do next week with the banking crisis and inflation still with us?
Well, you know, yesterday we were 2/3 25 basis point hike, 1/3 stay the same. Now we're 50-50. Yeah. So these odds are moving real time. I think they do another 25 basis points and see what breaks, because look, it's bad that we're having bank failures. It's bad.
Oh, terrible.
Yes, terrible. It's bad what's going on with Silicon Valley Bank and Credit Suisse. However, we need to see more inflation numbers like this. This PPI number having a flat core month-over-month number. This is exactly what we need to see. We need to see negative months. You really need to break the back of inflation. And until the system breaks, until more things that are systemically important look like they're going to break, I think Powell has to push it while he can. Because if you can't break inflation, you run the risk of ruining an entire society and turning into Latin America.
Understood. Ken Fisher, big-time Wall Street guy, was on the show about a half hour ago. He says, look, there's opportunity here. These big banks, they may be down now, jump in, because in 2 years they're going to be up no matter what happens. Would you be buying big banks today?
No, and I'll tell you why. The reason why the money center banks are not good stock investments is why they're not going to fail. They have to keep so much capital on hand, right? It's very hard for them to generate a high ROI, and as rates, you have an inverted yield curve, and so your net interest margin in certain circumstances is better because you're not paying deposit as much, but they don't have the earnings power they used to.
Okay, that's a good explanation. So what are you buying today, if anything?
So gold.
Yep.
Consumer staples, utilities, healthcare, and then TLT, the long-term 30-year treasury, because I think we're going into a recession. I think the Silicon Valley Bank had some very unique circumstances to it, right? This is horrific asset liability management combined with horrific lack of oversight by the San Francisco Fed and the local bank regulator. For them to miss this and to cause this another massive bailout and money printing situation is just a disaster.
Mike Lee, sorry. Mike Lee, let's get that right.
That's
I
all
didn't
right.
get anything wrong this morning. Thank you very much, Mike. You're all right. Lauren, look.